Okay, so now just a quick introduction of myself. I'll just flash everything out. Now I graduated by com science. All right, so my degree is actually computer science. Is more of a geeky guy than a finance guy initially. So I did 1 year as an air traffic control. After that, then I went to join the finance industry from '06 all the way until now. Right, I've actually started in trading in options first. Got myself very, very, very badly burned in December 2006. All right. So those who are actually interested to know the full story, you can actually call me out for coffee. Other than that, I've learned many, many things here and there. But one things I've actually learned in the world of trading is that no matter how much you try to understand and try to learn, right? Like for example, I've actually gotten myself certified as a chartered market technician. This takes 3 years of reading so much books that I think the height of those books is almost at my chest height from the floor to the chest. All right. So that was CMT. That was before they reduced the curriculum. So the passing rate was about 1/3 at that point in time. So that was 2014. One thing I've learned is that you can learn a lot about many different indicators here and there. But end of the day, right, what really makes your trading profitable is only going to be partially due to the techniques you're actually using on technical analysis. All right. And even on the techniques that you're actually using, you'll find that the simpler techniques actually works much better than the complicated ones. The reasons being that the simple ones, you have a lot more traders around the world using it, and hence it becomes self-fulfilling. All right. So two of the most simplest yet very, very effective and very easy to draw on your charts is actually really the trend line and the Fibonacci levels, which we are actually going to be looking at today. Okay, so what is in it for you today? I want to show you how to correctly draw trend lines. Now, of course, there's actually a lot of when I actually learn about drawing trend lines on technical analysis, right? You read some books, they say that you have to draw the trend lines based on the lows. And then you read some other books, they say that, oh, you can actually draw the trend lines based on the body itself of those candles. So the body lows, that means you're looking at the open price or the close price. Some of them, they have some very absurd rules on where you should draw the trend lines in here and there. Now, practically, I'm going to show you that there's no hard and fast rule, all right? There's a best way to draw trend lines, and there are substandard trend lines where you try to draw things in and you kind of like, okay, this is the best that I can draw the trend lines in. Do you think this is effective? You're actually having that question mark over your head, but sometimes it actually works. So I'm going to show you where you can actually draw substandard trend lines and where it should work quite all right, and how do you actually see whether it works or not. All right, so that's on this trend line stuff. Then after that, then we'll jump in straight into the Fibonacci retracement levels. So the common levels that you understand, the 38.2 and the 68.2, is it? On those levels are going to be key as well as the 50% mark. But when the prices actually really do approach those levels, what do you watch out for? All right, what are the things that goes through your mind? What are your actions on the markets going to be? All right, so I'm going to show you on that. Now, I'm going to jump straight into the charts itself. So today's session is going to be very interactive. So let me just push this back into the background. Okay, so whatever that you guys are trading in, I want you guys to actually type into the chat box. I'm already seeing gold and Apple on the chat box itself. So keep on typing. I also want to go through the major US indices. All right, so just to see how the markets are looking like. Let me just jump straight into the US indices first. So I'm actually going straight into the demo platform for IG. So if you have a live account, it should look exactly the same. Let me just look at NASDAQ first. NASDAQ is one of the highest traded instrument right now. All right, so I'm actually doing a right click, open market in new window. All right, so when I'm actually doing this, right, open market in new window, I'm actually pulling out a separate browser window that only just has got the chart itself with your order ticket. If I don't want to place any orders right now, I'll just push these order tickets away by clicking on this double arrow button at the bottom. Okay, so I've already just done that. Okay, let me just stretch this a little bit. Okay, let me just delete away the existing trend lines that I have drawn in the past. Okay, so we start with a clean slate first. Now, I'm actually looking at the daily chart right now first. The first thing that I always want to do is that I will actually just I will actually compress the chart so that I want to see a bird's eye view of how the prices have been like first. All right, so bird's eye view, I'm actually seeing that, okay, so the market has been climbing. It has one correction back around about Q3, Q4 last year, and again here. And then after that, it continues to climb again until now. All right, after that, then it has got quite a big plunge here. Questions on everyone's mind is this the end of the bull run, or are we looking at the start of the bear market? All right, so trendline is going to be helping you to answer that. But the thing is that once we have drawn that in, right, the answer that you're getting is not going to be a certainty. You're not going to be like, I'm 100% sure the market is bullish, or I'm 100% sure the market is bearish. It will not be like that. The main thing is that you're trying to see where's the probability of how things might pan out in the future. Okay, so let me just draw in one trend line here first. First thing first, I can see that there's actually some lows here. All right, so naturally I want to connect the lows of the candlesticks in order to draw that trend line in. But I also see that I can also draw a trend line in around about here. And of course, that in this case, this has already been broken. So I'll draw two trend lines in first, and then I'll explain what I'm drawing in. Okay, so I'm clicking on this drawing tool here, and then I'm selecting trend. I'll need to pick at least 2 to 3 points to draw it in first. Now, I'll draw in the ultimate bottoms around this area here first. So I'll try to connect this with this. Now, the thing is this, with trend lines, right, we always try to connect at least 3 dots in, all right? So the thing is, once we connect 3 dots, then it will actually be more accurate. So in this case, the 3 here we're actually looking at would be this low, and this low. Now, once I connect these two up, right, I can see that this low is actually quite close. So I will change this. I'll drag this and connect here. Now, the effect of what I'm actually doing right now here, right, is that once I connect this to here, I now have got 4 connections. 1, 2, 3, 4, right? I have 4 connections here. This makes my trend lines pretty strong. Now, the general guideline is I only actually need to draw in a trend line that connects at least 3 lows or 3 highs, right? So I'm drawing an upwards trend line. So hence, I'm trying to find 3 lows here. So I've drawn that in, and okay, this is going to be my longer term trend line. So this has been stretching since this is about July 2020 all the way until now. Of course, if you were to drag this chart a little bit further back, the upwards trend has been on for longer, right? But there's of course there's a big correction here due to the pandemic. So we just want to see from the start of the pandemic until now, is this upwards trend intact? So this is the first line here. Now let me draw in a second trend line. The second trend line, I actually want to draw it a little bit closer to right now. All right. Okay, let me just drag this across here first. Okay, I'm going to draw the second trend line in this inner area here. There's a lot of lows. I'm not sure which one to connect. So let me just draw in a tentative trend line first. I'll just take this and connect to this. All right. Now, when I'm actually doing a testing trend line, right, what I'm trying to establish here is there any other lows or highs that is touching this line and bounced off it? All right. So what I'm trying to find is a market respect. All right. So once I've joined this and this, it did not fulfill my 3 connections because it only has got 2, right? And when the markets come down here, it actually hovers around here. So I can see that there's some activities around this trend line. When it broke through, when it bounced back up, it hits this, it has a false breakout here and it comes back down. All right. So I think this trend line is good enough for me because there is some flurry of activities here. and we had a false breakout. But the thing is that after that, the next day, it tries to peep above that, but it comes back down. Now, in order to make this trend line a little bit nicer or neater, I'll now drag this point, and I'm trying to see whether I can actually push all the candlesticks around this area here to be below this trend line. Okay, or maybe just above. So, okay, I'll just connect it here. So in this case, right, when I actually connect it here, right, I now have my 3 touch points. 1, 2, 3. So the thing is, I'm actually connecting these third points on hindsight. All right, but this is actually okay, because the thing is that once you have made this connection here, right, you can see that the market actually hovered around this line here on this day, on this day, on this day. So there was 3 days where you have what we call a doji, right, where the market is actually undecided whether to go long or to go short. If you remember a few webinars back, right, we were talking about this thing about tug of war. All right, so the market has been trying to pull it up and down, and they are undecided, so they actually close back at the price that they opened at, or around about there, quite close. All right, and then after that, then the next day it tries to go above, did not, so it went back down. So right now, if you look at this, right, this trend line is of a shorter term than the first trend line we drawn in, all right, which was this. So how do you actually read these 2 trend lines is this? That means on the shorter term, and in this case, what I mean by a shorter term, we are talking about days and weeks. So that's the short term. So in the shorter term, we are seeing that the market has already came down, breached this upwards trend line. So it's now in a short to mid-term bearish here. All right. So as it's trying to come up here, you can see that these highs here are lower than these highs. All right. So you are seeing that this is a lower high than this, and this is a lower high than this. Now, one of the first rules for technical analysis is the Dow theory. If it's forming lower highs, and lower lows. All right. So this is a lower low than this low. So it's now forming consecutively lower highs and lower lows, all right? Then in that case, it seems that the downtrend has started, all right? The thing is, are we able to say for sure that this has started? I would think that there's actually a good chance that this downward trend has already started, but there is 2 obstacles. One, the first obstacle is this low here, all right? So when the prices comes to around about this level, so this low here is about 12211, all right? When it comes near to this price level, so I'll just put it as about 12200. So when it comes around about here, it will be testing this low before it can go further down, all right? So there'll be a lot of a flurry of activities here. Those who believe that Nasdaq has got room to grow will then buy around this level, all right? Those who are actually waiting to sell Nasdaq, they wait for it to breach this a little bit downward first before they start selling. Now, if you are belonging to the second camp, right, if you believe that Nasdaq is going to be going down, what happens is that when the price actually comes down further, it will then touch this second trend line which we have drawn earlier. All right, so this is the earlier trend line that we have drawn in. This is the long-term trend line. All right, now the implication is this. This is the shorter-term trend line. This is the longer-term trend line, right? When it hits this, this trend line is going to be extremely strong, all right? So if it hits this, and if there are some favorable news in the markets to help to push Nasdaq back upwards, it can jolly well just hit here and bounce upwards. Now, so if let's say if you had sold some Nasdaq here, and then after that it hits here and bounce, right? You're potentially looking at losses here, all right? So take note of that. That's one of the reasons or one of the traps that people actually fall in when they're actually trading such formations. Now, so how do you actually resolve this, right? Is that if let's say when the prices do come down to a lower low here, right? But you're not very sure because this can be your support level, right? So what happens is that instead of, if you have the full intention to maybe say go short for for 10,000 of 10,000 notional value of Nasdaq. Okay, I'm just using this as an example, lah. So if you want to short Nasdaq for 10,000 USD, cut that position down into 4 pieces. All right, so that means you go short for 2,500 worth around, say, about here, and then you wait. All right, and then you wait. So if let's say if the markets hits here and rebounds up, then at a certain point in time, you will be telling yourself, okay, I think enough is enough. Let's take the losses. Where do you take the losses? Usually when it breaks into a new high here. All right, because if it continues to form lower lows, then the downwards bias is still holding. So you can still continue to hold on to your short positions. But if it now breaks into a new high here, all right, I think that's where you can actually start to take the losses for your quarter position. That means your 2,500 nominal value worth. Right, in this example. Now, if you place a short here and the markets touch this larger trend line and it breaks, all right, that's your second quarter positions going in as a short. All right, so you'll be shorting another quarter position here, or your 2,500 in this example. And if the market continues to go downwards, then that's your third short, that's your fourth short. All right, so that's actually how you're going to be using this trend lines thing here. So trend lines, they're going to be telling you a story. So in this story here, we can actually see that it has broken the short to medium term trend line. It is already downwards bias. So the new downwards trend has already started. Is it firm? No, it is not firm. Hence, you're putting on testing positions. Where is your danger? Here and here. Okay, so these are your two danger points. So as you're nearing each danger points, you can get in with a quarter positions. Once you cross the danger points, get in with your next quarter positions. All right, so that's trend lines. Now, let's take a look at another instrument here. Okay, let's jump into gold first. I think someone is actually mentioning gold. Now we have cable, sterling versus USD, dollar, yen, Australia 200, Tesla, Sweden 30. All right. And okay, let's take a look at gold first. I think gold is very interesting. Okay, I'm going to open this on a new window. Oh, and I also am seeing silver here. Okay, I'll take a look at silver too. Okay, so same thing. I'm just going to be looking at the dailies first. Of course, whatever that we are actually learning today, right? You can definitely apply this on longer time frames like weekly, or you can go down to the 4 hours or the 1 hours. Now the trick is that the shorter the time frame it is, right, the less accurate it's going to be. All right, so I'm just using the daily as because it's quite a good middle ground that we can actually use to see how the larger trends are playing out. Okay, let me just take away all these trend lines. Now you can see that previously I've actually drawn in this trend line in anticipation of move downwards. So this move downwards has already panned out very nicely. This trend line was actually drawn in before it broke this. All right, so you can see how effective trend lines has been. But just to reiterate, it is not 100%. All right. Okay. Delete everything. Okay, so let's take a fresh look at this. Now, we can see that gold is now firmly in a downwards mode. First suspicion here, I'm actually going to verify is this high higher than that high? All right, so this high is 1965.29, 1959.20. So this is 65 and this is 59. All right, so this is a lower high. So Dow theory still holds lower highs, lower lows. It has been fetching pretty much lower highs all the way here and lower lows all the way here. Okay. All right. So now in this case, we actually draw the trend lines in the other side because it's already downtrend. So trend line. I'll first catch the highest point here and the highest point here. Now. This is what I call a substandard trend line. All right. The main reason is that I can only have 2 points, 1 point here and 1 point here. So there's only 2 touch points. I cannot get a third touch point. So If let's say if you have a very strong bias that you feel that, okay, I think this is just a temporary downwards movement of gold, I feel that gold can have the potential to go up higher, right? So if let's say that's your own personal view, right? You're drawing this trend line in first and you want to see what happens when the price of gold go near this trend line, right? So two scenarios. If you were to go near this trend line, if it breaks here, you're looking to be buying gold around about, say, about 1,900 plus a little bit, all right? But the thing is that that's going to be your testing position. Why? Because this high here and this high here is going to be your obstacles. So about 1965. So if you're going to be buying just above the 1,900 mark, 1965 is going to be your key obstacles. And of course, the 2,000 mark as well as the previous high is going to also be your key obstacles also, all right, for your bullish view on gold. Right? If let's say if you have a bearish view on gold, then in that case, I would rather that you actually wait for this price to go up and touch this trend line first. Now, when it actually goes up and touch this trend line, what we have is going to be your third touch. All right? And that's when a substandard trend lines become a good trend line. Okay? Of course, you can see that, oh, if you finally go there and touch, right, it seems like it is touching on hindsight, but it's not true because there's also a lot of other traders who are drawing this substandard trend lines using just these two points, because this is the only trend line that they can actually draw in here. Of course, you can have a counter argument saying that why not I draw a trend line here? All right, I'm connecting these 2 points here. If I want 3 points, I can connect this to here. All right, so what do we have here now? So this is your short-term trend line. All right, so if you look at just now the way that we are analyzing NASDAQ, right? So we had the longer term, the first trend line, and then we have the shorter term, which is the second trend line. Right, so in this case, this is your longer term trend line. This is your shorter term trend line. Right? Now, very interesting to see what the markets will react as it's going to be crossing this trend line here. Now, also notice that I'm going to teach you a new technique right now. This trend line is pretty steep. Now, if you have something that is pretty steep, chances are it's going to be breaking at some point in time. Okay? Of course, you are going to be saying that, oh, of course, Terence, if you are talking about a steep trend lines, you'll definitely break at some point in time, right? Just a when, right? So that's the big $1 million question. Now, if you look at the formation of gold right now here, even if it goes sideways, if it just travels sideways, it will break this trend line. So that's usually what happens with such steep trend lines. If the two sides are having this tug of war, the bulls and the bears, right? If they just manage to drag this whole tug of war sideways so that it breaks this trend line, the result of this is that the market is now suddenly looking to be bullish. Okay? So once it breaks through here, there is going to be a tendency for the prices to be climbing towards this longer term trend line. All right, but once it hits here, then it might just get bounced off and it continues its way down. All right, so think of this. So this is going to be a very likely formation here. Is this going to be 100% certainty? Again, it is not. All right, so just take this as a reference. We want to see how the prices play out. Now, how do you play this again? Price action. If you were to break this, if you were to break this high and this high, you can possibly get in with 1 quarter worth of a long position here first, and then you can get in a few more, one more quarter here, one more quarter here. If you're just playing this distance here, right, you can just go for a very short term long. When it's touching or about to hit this trend line here, that's when you can start to take profits. All right. So the thing is that if you still have in mind, like you want to really go long all the way, like diamond hands, I want to hold this until gold is $5,000, for example. I'm just saying it, but I'm not doing it. So even if you have that view, I'd rather that you guys go long a bit here, and then as it's about to touch here, take profits from every of your long positions. All right? Don't feel that you will miss out on this opportunity, because if it were to break, then you can start going long again. 1 quarter position, 1 quarter position, 1 quarter position, and so on and so forth. If it comes here, have a false breakout and comes back down, you have already taken your profits off here, right? So you have ammunition to play again, right? So don't be fearful of missing an opportunity, because this actually presents for you a very, very good opportunity to take the profits off the table. Opportunities will never stop coming, all right? There's always opportunities every day in the market. Okay, so this is how you're going to be looking at this. Now, I will now start to introduce a little bit of the Fibonacci to complement this right now, so that we can actually make this argument a little bit more complete. How do I actually introduce Fibonacci in here? I'll look at the previous big move before the markets comes down. All right. So the previous big move was actually from here to here. So when you're actually drawing a Fibonacci, you're going to be using the drawings, Fibonacci retracement. All right. If you want to see, the explanation is here, but I rather that you guys see the practicality of it. Now, I'm going to be connecting from the past to the present. So always past to present, past to present. Okay. So I'll take this low, I'll connect to this high. And then the third click is just to stretch it out a little bit. So this is actually how you draw a Fibonacci retracement. Past to present, or past to a little bit more forward into the future. That means like you go forward in time. Okay, always go forward in time. Never draw Fibonacci backwards in time. All right. So I actually did that mistake back in 2006. All right. It seems like a bit obvious, but when you are first starting out in trading, I know that there's actually a good potential to make that mistake there. So once I've drawn this in, right, what I'm doing here is this. Previously, the markets had a big climb from 1451 all the way to 2069. Now, once it's done with this climb, it's now coming back downwards. And as it's coming back downwards, where is it going to be resting? All right. 3 key levels, 38.2, 50, and 61.8%. Right? These are the 3 levels that you need to focus on. If you read some other books on technical analysis, they might say that, oh, this minor level is also important. This is also important. I would say ignore them for a start, because most other disciplines here and there, right, if you want to keep things simple, they always just look at this middle 3 numbers here. Okay, so just focus on these 3 numbers. Now, if you look at the price of gold right here, right, you can see that around by the 38.2 level, just before that, there's a little bit of a movement here. It actually bounced off before it even hits it. When it pierced through, it bounced off at almost the 50% level here. Okay, it bounced off again here, this area. Now, when it finally pierces through 61.8%, it pierced through a little bit, had a bit of a false breakout, and it came back up. What does it mean here? All right, so it means that these levels, be very careful. If you're already sitting and looking at profits, those levels are a great place to take profit. All right. So right now, as it's bouncing off here, right, even if it wants to go all the way down, even the markets needs to take a rest. Right. You just imagine when you're going for a long run, right? As you're running and running and running, if you are doing a 10 kilometers run, I'm assuming that you are not an inborn long distance runner, right? So as you're running towards the about 4 kilometers mark or 5 kilometers mark or the 6 kilometers mark, you will naturally want to take a break somewhere around about there. All right. So this is your 4 kilometers mark. This is your 5. This is your 6 kilometers. Right. Exactly. This is like your 6.18 kilometers. Okay. So the market is now taking a break. It's bouncing off the 61.8. And it's at this place here. We have this trend line. If it breaks, then it's going to be a good place for it to go further upwards. All right. Where it's going to be bouncing off again? Here. This is a potentially good point to bounce off back down again. So a possible trajectory would be like this. And then possibly downwards. If you want to go down further, then it can go down further like this. Okay, so this is for those who are actually thinking that it's going to be long-term bearish. That means long-term downwards. But if you sell right now, you're going to be looking at big losses if you were to break this trend line and go upwards. Okay, so this is how you're going to be using Fibonacci in conjunction with trend lines. Okay, And I repeat again, so whatever that I'm actually saying right now, I could be entirely wrong. Don't take this as a recommendation. This is just for reference. All right? So let's take a look at something that's totally different right now. Someone is also calling out commodities. Let's look at some something different. So let's look at Apple and Tesla. I think Tesla is very interesting just because of the huge move downwards. But let's look at Apple first. Okay. Now, take note that as with all technical analysis, right, it's not going to be, it's going to be more accurate for instruments that are more liquid. So that means it's going to be more accurate for indices as opposed to for individual stocks and shares. Okay, so for Apple, let's see. Now it has a gradual run up here. Okay, this is your pandemic crash. Okay, from here, it starts to move a little bit sharper. Okay, so let's take this point to mark as a reference point here first. So, okay, later I'm going to draw a Fibonacci from here to here. But before I do that, let me drawing some trend lines, but I'm not sure how come this looks a bit ugly here. Okay, I'm going to switch over to the weekly just to see if that area cleans up. No, it doesn't. I think it could be some block trades there. Okay, let me see whether I can pull out another chart for Apple. This one seems to be for a different instrument. Let me just take a quick look. Okay, I think let's just go for this first. Okay, I think this is because of the all sessions, hence some private trades being marked there. Okay, what I'm trying to ascertain here is to try to pick the lows that I can draw the trend lines in. Now, what I'm thinking of is this. So for the initial move from the pandemic, the obvious trend line is this. All right. So this trend line, the prices of Apple has already came downwards already. Okay, I'm just drawing this as a reference here first. So the reason for tech stocks to run up due to the pandemic and hence Apple seems to have expired. Why is that so? It's because this is the pandemic run up. All right. So if you draw this trend line in, the price of this stock has been above, then it came back down. And since then, it has been below this trend line. For a brief moment, it went above, but it's largely below this trend line. So if you want to redraw this based on hindsight, you can actually just park it here or park it here. All right? Something like that. But I think we can actually just keep it at the previous drawing. So it's now below this trend line here. It means that, so this trend line is your tech stocks run up because of pandemic trend line. Okay, so that reason is gone because it has been below for the longest time since October last year. Okay, so recognize that. The thing is that a lot of my friends are still saying that, oh, but tech is good, right? Because of pandemic. Then I ask them this question: pandemic, isn't the vaccine coming out? So why is the pandemic reason still being used right now? Right? So take a look at that. Now, after it has came off, we want to see whether it can potentially move down more than this. The thing is, Dow theory again, lower highs, lower lows. All right, so it's already forming the new downwards trend. Okay, so let's look at if we were to draw in the downwards trend right now. So I'll just connect up the highs. Okay, so I'll just connect this high to this high. So what I'm seeing here is that Apple is already on this downwards trend right now. and it's making a new low and is now getting a little bit sideways squeezed here. So I want to see in the past, is there any actions around about here? I don't think so. I don't see any actions here. So this is only like just one touch. I'm expecting the prices of Apple to continue to go downwards. Of course, anything can happen, so this is not a recommendation. Now, I want to also now draw in the Fibonacci retracement just to see where we are at in this Fibonacci retracement. So I'm going to draw this in right now. I'll connect here and here. Stretch this out a little bit. So once I've drawn this in, right, so since the start of the pandemic until now, if we were to have a correction, previously you had a correction then, but now if we were to look at this correction, 38.2 is here. So it's still early days. 50% is here, which is actually quite close to this block trade areas. And 61.8% is here. Okay, which is actually the start of this this move here. So it's still early days. I mean, if let's say if someone is actually looking to short Apple, I think there's actually a good chance there. But will I be shorting now? Maybe not. There is a risk that this would break this trend line and go upwards here, right? So I'm actually wary of that. I want it to form a new low here first, right? Form new low, I'll start getting in with my 1 quarter position, 1 quarter position, 1 quarter position, and so on and so forth, right? So where am I looking for the prices to gun for? I think 50%, I think that's where the first levels would be. And if we were to be really, really bearish, then I'm looking at 61.8%, right? So this is the potential move here, but with caution that it could just go sideways and break this and go upward again, right? It can actually do that. If we were to break this, if we were to go upwards, I'm actually expecting the price to be going around about this high here. So you have your head and shoulder formation. So this is the head, shoulders is going to be here, okay, before it goes downwards a little bit more. So just to be a bit wary of this, I think it's quite early days on how this thing will be panning out. If you want to short, it'll be below here. This is your shorting areas. Don't short right now. I don't think it's good. If you were to climb back upwards, if you were to go long now, it's going to be quite risky, but you need to have to wait for a break of this trend line, go long about here, but start to take profits about here. Okay, this is your shoulders. Chances are it's going to be hitting here, then it's going to be coming downwards. All right, so both points of view are there, bearish and bullish. All right, so take note of this. All right, so this is how I will look at the Apple. Okay, Tesla. Now let's get to something that's very, very, very interesting. Tesla. Yes, came off a huge amount. Okay, so even after yes came off to such a big extent here, right? If you look at it from March, so March last year, it was about $70 to $80. All right, so right now it's about 10 times of that. But the thing is that it has actually reached a high of about 900, came down to about 539. Okay, so in this case, I would really want to draw in the Fibonacci first to see where we are at right now. Okay, in this case, I will go back all the way to the start of the pandemic. So here, connect to the high, you stretch it out a little bit. All right, so where are the three key levels? 38.2, 50, 61.8. So 38.2, yes, we saw a bounce. All right, it has bounced off. It has a false breakout before it bounced. All right, this is your false breakout. Okay, this is your 30.2. Let me just, 30.2 is here. It has a false breakout before it comes back up. Now, at this point in time, right, I now want to draw in a secondary Fibonacci retracement. Because from here to here, this is a huge move downwards. This is like, we're looking at the price dropping by, what's the percentage here? It's about about close to about 40% of the move. All right, so this is already quite substantial. If you look at the price itself, from 900 dropping to 539, right? So this is already like close to about 45%, about 40-ish percent. All right, so I want to draw in a Fibonacci here. This time, I'm still going from past to present. So still going forward in time. I'm connecting now from the high to the low. Extend a little bit. So where are we seeing right now? So when I'm actually drawing this second retracement level here, I'm seeing that when it bounce off here, where would it be bouncing off to? Now, do you see a 50% here? Very nice, right? So it came off here. It bounced from here, goes to 50%. It tries to go again and above this for about 1 week. Not successful. Came back down. And then after that, then it tries to come up. It reached a lower high than this. All right. So you are forming consecutively lower highs. Lower highs. Now, where's your lower low? This low is lower than this low. Okay. But this low, is it lower than this low? Not yet. All right. So the thing is, this area is bearish. This is your bullish move that has most likely ended because it has hit the 50% mark. All right. Chances are I don't think it's going to be looking at the 61.8% mark. It seems to be coming downwards. Your key challenge is almost like right now. Right. This is your key challenge, 620. Once it breaks this, it will officially form a lower low. Dow theory satisfied again. And after that, then of course the key levels to break would be this again. So for those who are actually trading intraday, they have been shorting the market since about here all the way until here. All right. So if you want to actually take advantage of this potential move here, right? Not much meat left because from here to here, it's moved about halfway downwards already. So if you're gunning for here, it's just a 50-50 chance. All right. So odds are not in your favor here. All right. But of course, if let's say if you were to break this, then potentially it can go down further. Now the thing is, for it to break this and go down further, right? You not only need Tesla to be bearish, you also need the whole broad markets to be bearish together with it. Right? So if you go back to the fundamentals, fundamental analysis and everything, right? You need to find some fundamental reasons to together push the markets downwards. Right? I can actually offer you a potential reason. Sell in May and go away. Right? So when are we right now? End of March. So the thing is, if let's say if this sell in May and go away is true, then would I wait until May to sell? No, right? I will actually sell months before that. Actually, that's what everyone is doing. They have been selling from February until now. All right? So the thing is that now we're actually witnessing this move here is the sell in May and go away phenomenon that is already happening. All right? So just to let you in on that, in case you haven't noticed that people are already selling things in the markets. So that's Tesla. Okay, I see Tencent and JD, but before that, let's look at some earlier instruments first. Okay, let's go back up the list. Okay, so along the way, I'm going to be going through examples just to make today's sessions very, very practical. If you have any questions that's specific to Fibonacci levels as well as trend lines, just type it inside the chat box. Okay. Let's look at some currencies. So dollar yen. Okay, so dollar yen, fun because it has got a big moves that has been happening since the start of the year. Right, so that's the whole presidential thing. All right, if you were to stretch back the chart a little bit, you can see that the price of dollar yen has been a bit haphazard. Right, so this is your pandemic V-shaped move down and up. Since then, it has been going steadily, US dollar weakening. Right, and after that, then you have this big move up. So if I were to draw in trend lines, I'm naturally drawing a trend line here. I don't need to draw in this trend line because it's obviously broken, right? So I will draw in this trend line, but once I draw this in, right, what I'm actually thinking of is that this trend line is way too steep. I'm actually expecting this to break, and then if it were to break, can I draw in a secondary, more gentle trend line, which I don't think I can right now, right? So that's what's crossing through my head right now. Now, I want to see one thing here first. So from this high to this low, where are we on the Fibonacci retracement? Okay, so I'm going to draw in this Fibonacci retracement again. So here to here, extend. All right, so if I look at this, right, we can see that the previous three levels that we mentioned as important, it has already decisively broken through. All right, so 30.2%, this is here. It was reflected downwards when it reached 30.2%, but after that, then it got pushed backwards because of US dollar strength, quite very, very strongly. And then it didn't pause at all for the 50%. It did not pause for the 61.8%. It went back up, but after that, when it comes back down, it actually bounced off here. So for me, right, I think this is actually a very, very strong sign that this move is very, very strong, that it can continue to move upwards. But I'm very wary and very cautious that this is an exponential move. All right, so this is your steep trend line move. Quite dangerous. Okay, so if I were to draw this trend line in like what I mentioned just now, this is extremely steep. Okay, so even if the markets just move sideways, by about mid-May, it would have broken this trend line. Okay, so take note of this. This is a little bit overstretched. I'm very wary about going long for dollar yen right now. And if I were to go short, it's also a bit dangerous just because the sentiments are very bullish. All right, so for dollar yen, nothing to do right now, but I want to see what happens at the 61.8 level. So let me just draw this line in here. Okay, at this level, when it touches this line, is it going to be bouncing or is it going to be breaking through? If it were to break through and break through this trend line, this is a potential opportunity to short a little bit here. All right, so that's my opportunity here. Now, if I were to look at the bigger picture, right, I'll note something here. This, we're actually forming lower high still. Lower, this high is lower than this high lower than this high, this high lower than this high. All right, let me draw in this longer term trend line in. Okay, here. Right, so once I draw in this trend line here, I can see that this area has already broken through here. Right, so why am I still drawing this? It's because just remember one thing is that every time when a trend line is broken, right, the prices has got a tendency to come and visit that trend line again, even if it wants to continue to move upwards or in that same direction. Okay, so this trend line I've actually drawn in, so it has decisively broken through, but this is exponentially steep. So right now, this is potentially the support level. It can potentially come down here, break through this, comes and revisit this. And if it wants to be bullish, it then bounces off here and then continues its run up here. Okay, so if this is the for the long-term bullish scenario, but if it's a long-term bearish, then we're already observing that it's actually making new lows. This could be the most recent high, and that's it. And then it can potentially just come downwards here. Okay, so just be very, very careful of this. Now, let me just also draw something in that's slightly out of scope for today's webinar. But this will actually open up your eyes a little bit on what could be happening here. Okay, arrows. So we are seeing this move here, right? Okay, sorry. Let me find another line here. Okay, I'm just going to be drawing a point-to-point line. So we can see that the markets came from here downwards to here. And then the markets has climbed from here to here. If let's say this lower high, this high which is lower than this high, is not a coincidence, then potentially the markets might be resting And let me just duplicate this point-to-point line here. If it's only just resting and going for a long-term downwards move, then this could potentially happen. Okay, so take note of this. The thing is that this is actually a very, very steep line here. But of course, for this to happen, I think fundamentally something has got to change. All right. So it could be things like certain fundamental changes to the economy happens. The US dollar strength is no longer as strong as it should be, or people recognize that, okay, I think the strength is actually overplayed. It should actually come down more. Okay, so take note of this. This could be one of the potential play out. So the potential bullish scenarios would be that if it continues to go bullish, it bounce off the line that we saw just now and continues to go upwards. If it wants to play bearish, then this could be the potential trajectory. Okay, so this is dollar yen. Okay, let me just pick Australia right now. So Australia 200. I don't personally trade this market, but let me just take a look at this right now. Okay, so pandemic is start of the pandemic run is here. Okay, so it's kind of going a little bit sideways here. Short-term area, I can draw a trend line here and here. So later on, we actually draw those trend line ins, but let me just put a long-term perspective here. So Fibonacci retracements. Okay. So I've just drawn this in. If let's say if things were to go bearish, then these are the areas that we are going to be looking out for. Thing is that, is it really bearish? Let's draw in a long-term upwards trend line first. So this is a potential upwards trend line. And if I want to actually include a little bit more points here, I would then shift this to here to include these points in. And this now looks like it has got more touch points. So 1, 2, 3, almost touching. I will count this because it's a longer term. 4, 5, almost touching. 6. All right, 6 touch points. This is your long-term trend line that is going to be very strong. All right. If the market continues to go sideways, then this is the one that will be determining the fate of Australia 200. Now, this is a very good run-up. Just imagine the psychology of everything, right? So people are like looking at huge profits on their trading account. They'll be thinking, okay, when should I take profit? Should I take profit now? What if the market continues to run up? I'm starting to FOMO, right? But now let's look at the shorter term trend and let's zoom in to this area here. Okay, so let's zoom in here, draw in your trend lines. So trend. Now notice that I'm now only connecting these 2 points. This third point here is not really touching it. So it's like a 2.5 points trend line. Not very good. This is what I would term as a substandard trend line. I want to see the next time when the prices meets this trend line, what happens. Is it going to bounce off or is it going to break through? Okay, so short-term trend is downwards. And if I were to encapsulate this area, just connect this and this. You can see that this line is sloping downwards. So this is downwards, this is downwards. We are in a downwards moving channel. Of course, this is a very, very gentle downward, so it still results in an apex here, which also means that the price is going to be breaking out somewhere because it has to break, right? Because it's coming to a point here, right? So if we were to, so all eyes are actually looking at this longer term trend. So chances are, this is not 100% of certainty. Chances are the market is going to be hovering around these 2 lines until it reaches here. And then this is your decision point. All right, is it going to bounce and go up or break and come down? When is this? May. This is May. Remember, sell in May and go away. So the thing is that I'm not saying that it will break this and it will go down. I'm just offering that, okay, then potentially this could be an excuse for the markets to go downwards. All right, it's just an excuse. Sometimes the markets wants an excuse to do something. because the market has run up so much, it needs an excuse to take profit. It needs an excuse to do something. So you're just needing for a trigger somewhere to say that, okay, let's go down. Now, let me offer you another excuse that the markets can potentially go down. Now, if you are looking at this whole run up here, right, this is because of the whole pandemic, right? So everyone is just thinking that, okay, so pandemic has been bad, so it goes down. Every time when it has got some lockdowns, whatever, the markets reacts. Every time when there's good news, the markets goes up. And then when there's a development of vaccine, market goes up further. Right? As the deployment of vaccine is done, people are like, okay, so vaccines is all distributed and injected. What now? Actually, nothing much. Okay, so maybe there's not much of a reason for the market to go up. Then maybe it should come down. See? So this is what we call the buy the rumor, sell the news. This is your buy the rumor phase. When the vaccines is fully deployed, you might get a sell the news stage. Right? Of course, this is just potential. This is not of a certainty. Right? So just offering that as an explanation. Okay, I'm aware of the time that we have spent here. So this is actually exactly the 1 hour mark here. Okay, let me see whether is there any questions here. Okay, someone is actually asking for webinar sessions on the various types of Fibonacci's. All right, you have mentioned classic Fibonacci's, what we have done, Fibonacci fan. Pretty much the concept is going to be very similar. So the Fibonacci fan itself, right? I'll not come up with a full webinar on that. But remember, we are talking about steep trend lines versus the more gentle trend lines. So when you have a steep trend line, if it becomes more gentle, then you're looking at the next line in that Fibonacci fan. So that's just the explanation on that. But because it's a little bit more abstract, you're going to see much less traders using it. And since there's much less people using it, hence it doesn't self-fulfill. And hence it's not as effective. Is it still effective? I would say yes, to a certain extent, just not as effective as your trend lines and your Fibonacci's. All right. So someone is saying that, okay, drawing trend lines seems to be an art. Everyone draws it differently. Now, it's the same thing as when the price of an instrument, when it's approaching a certain support or resistance level, right? Different traders draw in different support levels around that area. All right. So just now when you will see me deleting some of the things that I've drawn in, right? Instead of drawing in lines, sometimes I'm drawing in areas. That means what I'm talking about is like I draw in rectangles, right? So why am I doing that? Is that sometimes I will actually determine that, okay, maybe this area is where most of the people will draw in their trend lines, for example. So let me just offer you a few different trend lines here. So this trend line is what I've drawn in here. Okay, maybe some other traders would draw in this trend line by connecting these few dots here. This is also a valid trend line here, right? So if this were to break, it will still come here and get supported. So if I were to draw in, let me just delete away this. Okay, let me just drag this here. So if I were to determine an area of support resistance, instead of one line, I'll actually put this whole area as the support levels. All right, so this is where we are going to see a flurry of activities here. All right, so it's correct that it's correct on the statements that trend lines is actually an art. But the thing is this: if you see this as distinct lines, right, it's still going to be one line here, one line here. So between here, if you're going to be doing any buy and sells, you're not optimizing on the effectiveness of the trend line just because that there's a lot of activities there. Your tug of war line is going to get pulled by both sides. So your chances of making a good call there is going to be 50-50. Not exactly the odds that you're looking for. But if this whole area is broken, and this line is broken, and this trend line is broken, and you start selling here, all right, then effectively, you have already crossed most of the potential trend lines that everyone is drawing, and it's still going down. That means you have a higher chance that it's going to be going downwards. All right. So although the art of drawing trend line is really subjective, but if you were to consider, okay, I think most people will draw the trend lines around here. So you'll be thinking to yourself, what if all the trend lines breaks? Then in that case, I have a better chance of getting it right. Correct? So that's how it is. Okay, I'll just answer a few more questions. Okay, so how can we use trends and Fibonacci's between the 1 minute to the 3 hours? Now, as you go down the time frame, it's going to get less and less accurate. So daily is good. Weekly is of course very good. If you get down to the hourly, it's going to be okay, not fantastic, but okay. 4 hourly is actually slightly better. Anything than 1 hour is very very frivolous. It's just going to be like a touch and go kind of a thing. And then even if there's respect, the respect might be there for just a few minutes and it's gone. All right. So for those who are actually trading the 15 minutes, right? So they can be looking at the 15 minutes or the 5 minutes candles. And once it breaks through a certain support resistance, they might get in with a trade and then they get out after a few minutes. It's going to be a very fast movement there. So it's still effective, except that your kind of action and your time frame is going to be very short. So some of them actually use algorithms to trade those breakouts there. Okay, so right. I'll just end off the sessions here. Let me just go back to my slides here. I just want to end off with this statement here that says this. I've touched on this in my previous webinar on where I actually brought in this point on the lemmings, right? So I repeat again, don't try to be in front of a market mover. It seldom ends well, right? What you're actually trying to draw the trend lines and the Fibonacci's is that you're trying to see where the action is going to be happening. After the action has happened, where the market is already being moved, you get in with, is it a full position? No, 1/4 position first. Because you're suspecting, okay, I think there's going to be a new move that's happening, but let me get in with a quarter first because I'm conservative. Now, if the markets prove that you're right, get in the second quarter. Prove that they are right again, third quarter. And if you are right yet again, put in with your fourth quarter. All right, so always assume that you are unsure. All right, you want to be behind the market movers. Let the market move it first. All right, understand that you can be a lemming and you can still aim to be a profitable lemming. All right, so always have that mindset. So the trend lines and the Fibonacci levels, they're just tools. Your mindset is the one that's actually going to be making you profits. And the way that you place your positions, 1/4, 1/4, 1/4, 1/4, price action trading, that is what is going to be making you money. Because you are always assuming that you are not sure where the market is going. Whether is it going to be going up or down, you're not sure. Hence, you go quarter by a quarter. Okay, so I hope that this session is going to be useful for you. And if you have the time, just help me to just scan this QR code here. It just takes about 3 minutes to fill in the short survey. And I'll appreciate your time to fill this in. So with this, I'll actually end off today's webinar. Hope this is useful. And as I repeat again in the previous webinars, we're now going to the intermediate series. So if you find that today's session is a little bit fast, it's actually designed to be a little bit faster. I will skip through all the various jargons just because I'm assuming that you already are aware of that. So if you find this a little bit hard to follow, we will be putting up this as a recorded webinar on our webinar library. So search for Webinar Library Singapore. You'll find that. Okay, so thanks for joining us this evening. Hope to see you again next Thursday. And for those who have signed up for our big event this weekend, I will see you again this Saturday. All right, thank you. Cheers. Bye-bye.